Hello, and welcome to Homeowner AF, the Canadian first-time homebuying podcast. I'm Brianna Goslin, mortgage agent level 2, and I work with Canadian first-time homebuyers every single day. If you want to own real estate in Canada but aren't sure how to position yourself to get there, this is the podcast for you. I want to see more young Canadians in the market, building equity and long-term wealth. That starts with getting the right advice at the right time, so you're positioned to act when it matters. Each week, I'll bring you bite-sized episodes that actually move the needle toward homeownership. Short, strategic, and packed with practical tips that you can use right away. I'll cover topics like minimum down payment, closing costs, credit, co-signers, and more. Remember, your finances are like a thumbprint. No two are the same. For advice tailored specifically to you, book your free call at briecallme.com. Now, let's get into it. Hello there, and welcome to Homeowner AF. Today, I'm talking about what is included in that mortgage payment. And I'm going to tell you about all the things that you need to know to make sure that you choose the right one and it's optimized for your long-term financial goals. So this question is something that I wish more of my clients asked me. And it's what is included in my mortgage payment and what frequency should I choose? Now, this is a small thing that actually could make a huge difference at maturity for how much mortgage you have paid off, how much of that loan that you've paid off. So let's get into it. And stay tuned till the end of the episode so that I can give you my best and easiest tip to save money with your mortgage payment. All right, let's go. So first things first, let's talk about frequency. Everybody has access to this choice, whether you want to pay your mortgage monthly, which is typically how it's set up by the lender when you receive your mortgage commitment. You can also choose weekly, bi-weekly, accelerated bi-weekly. These are all options that we can choose. But why would we choose one over the other? Well, lots of my clients do choose a monthly payment because that's how most of their bills are paid. And it works for them, and they can keep track and make sure they never ever miss a payment and always have that money in their bank account for that pre-authorized debit. That's great. That's fine. Ultimately, the goal is that you pay your mortgage payment every month or every week, whatever you've set up, but never, ever miss a payment. Because once we start missing mortgage payments, then lenders are much more unlikely to fund a mortgage with us that's secured against our home. It's just something you don't want to do. So all that to say, make it easy on yourself. Let's talk about weekly. So your weekly mortgage payment will just be that monthly mortgage payment divided by 4, and you will get every week you will be debited that amount from your account. Bi-weekly, same thing. We're going to cut it in half, and then every 2 weeks you will pay that mortgage amount. Now, the special sauce, that exists with the accelerated bi-weekly payment. And be careful here because some lenders will only allow you to choose an accelerated bi-weekly payment versus just the bi-weekly. That's that monthly payment cut in half. The accelerated bi-weekly payment is slightly higher than that than that bi-weekly payment. And that means that you will be paying more money towards that mortgage principal. You will also have an extra payment in the year compared to choosing monthly, which means, again, you will be eating into your loan quicker, in effect, paying less interest. And we all love to pay less interest. And truly, this is something that I wish people spent more time thinking about than the interest rate, because over the life of your loan, it can really make such a difference if we have the right mechanics in place for you, for your mortgage when we set it up. Now, next thing, property taxes. This is a huge one, especially if you're a first-time home buyer. You've never had to pay municipal property taxes. This is something that in different municipalities, they will do differently, but your lender may offer to pay your property taxes as part of your mortgage payment. So they will take some extra money every week or every 2 weeks or every month, depending on how your payment is set up, and they will remit that to the municipality when it is time to pay your property taxes. Now, how do they get this amount? Well, typically they will look at what your annual tax rate is, they will prorate that and you will get whichever amount it is for the week or the month or the every 2 weeks, depending on how you have that set up. Now, does my payment fluctuate? This is a huge one. And if you don't know the answer to this, that's okay. Literally, nobody has taught you. That's why I'm here. If you choose a fixed rate payment, no, it will not fluctuate. You will have that same mortgage payment for the 5 years of your term, or 3 years, or 2 years, or 1 year, depending on what you've chosen when you set up the mortgage. Now, if you are on a variable rate mortgage, there are 2 things that could happen. The first, if you're on an adjustable rate mortgage, sometimes people call it an ARM or an ARM, that means that your payment will fluctuate with the Bank of Canada's overnight lending rate, which means you should be paying attention to those announcements because it will affect how much money is literally coming out of your bank account every month or every 2 weeks or every week, whichever you decide. Now, there is a situation where you can have a variable rate mortgage, but your payment doesn't change. And this happens with a lot of the big bank mortgage products. So if you are with one of the big 5 banks, you might have what's called a static payment variable rate mortgage, which means that that payment will stay fixed, just like a fixed rate. But your mortgage will act a little bit differently, which means if rates go up, if the variable rate goes up and Bank of Canada says we're raising the overnight lending rate, then your amortization will start to lengthen, which means you will be adding time to your loan because you're actually not paying enough interest to keep it on track. Now the same will happen, but backwards, if the Bank of Canada decides to lower their overnight lending rate. That means that you will still be paying the same amount, but you will actually be paying more to principal, which means that your loan length will decrease. This is complicated, and if you want to talk about how this is going to work for your specific mortgage, go ahead, book a call at www.brecallme.com, and I will walk you through it with your own numbers. Totally okay. Now, I have one more tip for you when it comes to your mortgage payment, and this one is so easy it hurts. Really, it's just about reading the fine print, guys. And if you're working with me, don't worry, I do that for you, but you still should be reading line by line your mortgage commitment because you truly are signing off on a massive loan. And we want to make sure that you know how your mortgage payment is going to act throughout the life of your mortgage, even past that 6-month or 1-year anniversary mark. So, my hot tip, make sure that you're not paying for any services that you don't need through your mortgage payment. Lots of lenders will offer a complimentary service at the beginning of your mortgage when it funds, which is great. It can be something like insurance for any systems in the home that might break down. Usually it's something around those lines, and they will give it to you for free for 6 months or for a year, typically. Sometimes it's 3 months. But after this free period, complimentary period, you will then have to pay for this service. Could be $20, could be $50, could be more. It is outlined in your mortgage commitment, of course. So again, if you're working with me, I always make a note to appear in your inbox before this starts charging you so that you can cancel it if that's something that you don't feel you need anymore or the value's just not there to be paying for it. If you want to keep it, fine, blow your hair back. That's okay. You've made that decision consciously and you know that you will be charged because you have signed an agreement with the lender so that they can charge you for that. So that's my hot tip. Read the fine print, save yourself some money. Let me help you save some money. And if you want to talk about mortgage payments or what a mortgage payment for a new home could look like or your first home, go ahead, book a call, www.brecallme.com. Send me your questions if you have any questions about your first mortgage, your second mortgage, mortgage renewals, anything mortgage related. I'm happy to chat and I will answer it on the podcast. Have a great week, guys. Thanks for listening to Homeowner AF, the Canadian first-time home buying podcast. You'll find links to everything I mentioned in today's episode in the show notes, along with details on how to connect with me. I welcome all of your first-time home buying questions. Send me a voice note to have your question featured on air. And if you're ready to talk through specifics for your first home purchase, you can book a free call at breecallme.com. Remember, if home ownership is your goal, you could be closer than you think. You just need the right information to make the right move. I'll be back next week with another tidbit to help you get there.